the mindset people have is real estate's a great investment long term and I'll do anything to get it. And so the argument is if prices do get cheap enough, everyone's just going to jump back in, and that the floor is going to be there at some point supporting these ridiculous house prices that we have in Canada that make no sense whatsoever but fundamentally, and that you can't even find cash flow in 99% of the markets in Ontario. How does that make sense?
It doesn't. I mean, I will say I have had a couple of clients who have gone to, they sent me deals from Manitoba and whatever to look at. And they were great. Like, I mean, I couldn't believe the cash flow. Like, it did $200,000 for like 4 units, and the thing was like running $3,000 a month in rents and whatever. But no, in Toronto and I don't know anything about British Columbia, but in Toronto, I think the mentality has to change. Like, people have to, because the thing is, once you have had, my uncle lost his shirt and went bankrupt and got sued to close a deal for whatever the case may be, and people take losses, and then they're like, oh, maybe this isn't such a good idea. But the other thing too that we haven't had since 1990 in Ontario, which is interesting, is I like from both in 1990 and in 2008 in the United States, like, real estate is a long cycle, right? Like in 1990, it took until like 1996 until it was time to buy again. And it was just a bloodbath until then. And similarly in 2008, it wasn't until 2012 that things got to, be where we just haven't had that since 1990 here, right? Like, a market correction here is, oh, it went down for 6 months and then to new all-time highs. Then, and another thing, oh, okay, back for 3 months and then all-time highs. And it just, we haven't really had, and for a very simple reason, right? Like, the interest rates, and it's like, if I don't know if you follow Ray Dalio or whatever, but it's a very predictable cycle, right? Like, the interest rates have gone from like 18% in the early 80s all the way down to zero. And then now we're in the fiscal stimulus thing where the government's just spending money like crazy and whatever. And, I mean, I don't see an interest rate environment where the interest rate cycle stops and you go from, it goes from all-time highs down to zero, then fiscal stimulus, and it just bounces along zero forever. That doesn't seem to make any that would defy how the interest rate cycle has worked for,
Are you inferring though that we could see further rate hikes? Because I mean, we just had a rate announcement last week that decreased rates. I mean, I feel like the sentiment right now is that the Bank of Canada is going to lower another 50 basis points this year, potentially 75 basis points next year. Like that's kind of like generally what the markets are saying. So you feel like that's not accurate? What do you think?
No, I can just speak about, I mean, and again, I don't really have a horse in the game, and that's why I don't really, like, I don't really play that game. But I would say that if that happens, like, so where does that go? The rates go back down to next to zero and just stay there for all time? That doesn't seem to make any sense.
Hmm.
Also, like, what about the effect on the currency and that effect on inflation?
Yeah.
And whatnot, and it just hasn't been. I mean, if you study cycles, that's not the way that cycles work. So I can't really say. It's predicting interest rates will make a fool of any man, right? But I
Mhm.
would say that, yeah, the general sentiment is that you're going to head to lower rates, but how much lower? I don't think you're going to go back to zero. And then what about all these other exogenous things like the currency and the effect of inflation on that and whatnot? I Also, I think that there's like we're at a very interesting time. Like, that's another reason why I'm out of North America, generally speaking, because you have sort of the end of the American empire and a de-dollarization globally that's sort of happening. And at the same time, you have the end of the long-term debt cycle, and that seems to have run its course. So uncharted waters, like, it's an 80-year cycle and the fourth turning type of argument as well, and it's like an 80-year cycle, and who knows where it goes from here. But what I do know is that if you invest in markets where financing isn't readily available, like, it'll cost you 12% to get a mortgage, maybe 10% to get a mortgage in Mexico, for example, and that you tend to make a lot better, and same in Belize, and you tend to make a lot better money if you're investing with cash, obviously, because you know, like, are you going to own, if you can get 8% at the bank, are you going to own a property if it's making you 3% cap? Probably not.
Yeah.
You know?
Good. That's a good point. I like how you position that, is look at markets where financing is not as easy or it's very expensive, because that, you know, almost ensures that all the speculators stay out of the market, you know, which is where an investor wants to be. He wants to be amongst investors, not amongst speculators, because the speculators are, you
Fuck
know,
everything
they
up.
cause a mess. Yeah. Hey guys, thanks for watching our Clips channel. Why don't you go and check out some more clips? We got lots of other good content somewhere over here. Don't forget to like, comment, and subscribe.
Boom.
That was good.
That was good. I like that. That was good.